Welcome back to the Dividend Diplomats YouTube channel. Lanny, Bert, the Dividend Diplomats. Here's a fun question that we're going to talk about today, Lanny. I have found two stocks.
Hmm.
Is it time to sell or double down on these two positions?
Dun dun dun. But before we check this out, guys, subscribe, like, and you let us know as we go through the video what you would do in Bert's situation here. Because he's got two dividend stocks, one that pays 4%, one that almost pays 5%. One stock is up this year, one stock is down this year. Let's see what Bert's about to dive into.
Yeah, so for each of the companies, we're going to share the position, share the gain, how much income each produces, run them through our screener, which focuses on those three metrics: the PE ratio less than the S&P 500, payout ratio less than 60%, history of increasing dividends, and that bonus metric, the dividend yield. I'm always down to trim some positions in my portfolio. These are two that have kind of bothered me for a long time. I wouldn't mind not following them, but I also wouldn't mind keeping them or doubling down if it makes sense. That's what we're going to answer today.
Wow. Double down, double or nothing.
Yeah,
Two for one.
push
What's
those
it gonna
all
be,
in.
brother?
Yeah, and this is also part of the reason why I'm thinking about this too. With the market being on the tear that it is a good time for some to either recoup some losses in the past, hint for one of them, or it's another one, a good time to capture some of the gains that I have while the market is high, and then wait and find that cash and redeploy it to another company in my portfolio or a better company that fits my metrics. Transparently, the latter is the harder one right now because there aren't a ton of great stocks to buy.
Well, that first stock that is on the chopping block potentially is a stock that we both own, a stock that actually I believe just exited Northeast Ohio with their natural gas business selling off to Enbridge, ENB, Dominion, ticker symbol, the D,
Yeah,
just
this
a
one,
big D.
I don't
No
know.
pun
I don't
intended.
know if I'd say it like that, but we'll find out. Dominion has been a thorn in my side for a long time. I owed 17.35 shares. Market value is $1,000, $1,008. My cost basis is 1,180, so that is a loss of 14%. This has been a loser from the get-go. Why is it even up here after it has had a strong month or two? They are now up 19.89%. 20% over the last 52 weeks. Utilities have gotten a huge bump in the last month. That's what's having me think, is it time to take my losses when it's at trading where it is? So, lady, what are some of these metrics looking like through the DD stock screen?
Well, luckily your loss isn't too significant
No,
here as well. So, a couple
I
hundred
hope so.
bucks max here. But yeah, Dominion trading at $58.16. Expected earnings a whole $2.77, a 21 PE ratio,
Mhm.
which normally they aren't priced this high. So that is a higher PE ratio for a company that technically plays in the utility space.
Yeah. Their annual dividend is $2.67. That gives you a payout ratio of 96%. No
Get that
bueno.
crap out of here.
Yeah,
No, thank you.
they haven't
You
had
know,
any
like
dividend growth. Yeah, they haven't had dividend growth, and they obviously can't keep growing the dividend with that 96% payout ratio.
Well, they reduced the dividend once they sold off a ton of assets to good old Warren Buffett. Remember
That's
that?
true. Yeah, how could I forget that?
Yeah,
Uh,
Warren Buffett says, give me my dinner and the steak
well,
and the cake."
he at least made money on the Dominion deal. So their dividend yield
Absolutely.
is 4.59%. That's a hair above that 5-year average of 4.44%. So it's basically even. Again, they're up 19% year to date, up 19.99%. 52 weeks, down 25.93% over the last 5 years.
Interesting. That is Dominion, Bert.
Hmm.
Don't like the PE, don't like the payout ratio, obviously.
So it's got a lot going for it there. Yeah, I don't like it either. I can tell you for certain this is not a stock to double down. So if anything, I'm definitely going to be
It ain't.
looking to exit this company. Target price range, I'm shooting. If it gets into the mid 60s is going to be where I target to exit. So maybe around $65. And then I'll set the limit orders for it and then see if I can ride it up even higher. See if there is another bump, another wave for utilities. But yeah, Dominion, absolutely not doubling down, looking to exit this position in the near term.
Mm, no argument there, Bert. So the second stock that we featured quite a few times, quite a few years ago here on this channel. I think a lot of you guys also were scooping up shares after we were talking about them, and you're probably up, I would hope, a little bit in it, or you might be back to even again. But we're talking SpartanNash, ticker symbol SPTN, the big quasi-governmental food
Yeah.
distributor supplier.
Yeah, they have governmental wholesale supply, so they do a little bit of each, and that's what initially attracted us to them. They're not a very large company. Their market cap's less than a billion. It's 743 million. Year to date, they are down 8.4%. 52 weeks, they're only up 3.67%. Over the last 5 years, they are up 85%, though. So in the long term, that's great. Fortunately, I've not held them for 5 years, so I've not gotten to enjoy a lot of the positive news for SpartanNash. Currently, I own 73.86 shares. My market value is 1627. Cost basis 1518. That's a gain of $108 or 7.13%. This position produces $64 annually of dividend income.
64 buck overs, guys. So remember, Dominion produced 46. This does 64. So he's just a smidge over $110 in dividends that are on the plate right now. So SPTN, though, traded at 2203. Expected earnings 203. A PE ratio under 11, 10.85.
Their dividend's 87 cents. It's a payout ratio of 42.86%. So it's a very solid, very manageable payout ratio for SpartanNash.
Now, they have grown their dividend 5 years, about 3.17%. Been doing it for 13 plus years. So not the highest dividend growth, but what does that dividend yield look like be on SpartanNash?
3.95%, a hair above its 5 year yield of 3.85%. So it's not terrible. You know what? Going through those metrics for SpartanNash, this is what I'm going to say. I could go either direction on this one. And where it's sitting right now, I'm not doing either. I'm not going to exit. I'm not going to double down while it's sitting at 2203. If it goes up $2 a share, might be looking to exit. Might say, hey, let's take some gains here. If it goes down below $2 per share, $2 per share, if it hits 20 or even into the high teens, absolutely there's a case to double down on SpartanNash. It can go either way. So I'm a little less decisive about what's going down here for SPTN.
Yeah, if it drops to like 19, your yield swells up to about 4.58. So you're over the 4.5% yield, getting a little bit more reward for the risk. Payout ratio does look safe. PE ratio looks pretty low. They're down this year, which is, kind of contradictory to every other stock. So I wonder could they be an acquisition or merger target at some point?
Someone that needs some distribution help, they have some major distribution channels and they want that set up and they have some product to go. Absolutely, they could.
Interesting. So,
yeah,
Bert saying, guys, upper teens, low 20, maybe to go all in, to double down, or 25 plus maybe to exit the stock. So another 10 to 15% of appreciation here.
Everyone, let me know what you think about Dominion, what you think about SpartanNash. What would you do if you were in my position? Throw it down there in the comment section below. If you haven't already, subscribe to the channel. Give this video a thumbs up. And remember, you're either with us or you're against us, Jack.
That was Bert and Lanny from the Dividend Diplomats. Over and out.